Ladies and gentlemen, boys and girls, welcome back. When you are first starting out, whether you're aiming to be a dividend investor or growth investor, day trade or options trader, I think we can all agree that it's a bit scary. Putting your money into something that can be gone tomorrow is a scary thought that can kill your desire to invest. This is one of the reasons I believe dividend investing trumps growth investing, because I personally feel like if I've got my money parked somewhere, then I need some type of return on it. The one thing about growth investing is that you don't realize any of those gains until you sell that stock. Meaning, you could be up 300% on a stock today and be down 30% the next month, with nothing to show for it if that company does not pay dividends. Dividends are the keys to financial freedom and early retirement, and those of you who aren't making six figures or are making what the average median income is, which is about $45,000 a year or less, then you desperately need to build up your passive income starting now. If you haven't already, any amount of extra income is better than none, right? So yesterday I made a video talking about Gladstone commercial, ticker symbol GOOD. And in that video I said that I was gonna sell, but you know what? I lied. That shit's up 6% for the week, so I'm not fucking leaving. Just kidding. Though I am rethinking my strategy of selling all of my Gladstone commercial stock to buy more of this. Main Street Capital, ticker symbol MAIN. Ladies and gentlemen, this is a monthly paying BDC, business development company. And before I tell you exactly why I'm looking to invest heavily into this company, I wanted to highlight that I did make a mistake in my video from yesterday. I called this stock, I said that this will be another REIT, and it is not. It's a BDC. Which, if you're wondering about the differences between the two, then I'm going to name them right here, right now. Starting with the first one, which is basically the historical performance of BDCs in an inflationary economy. So I'm going to read from an article very briefly from Seeking Alpha that explains it a bit more. BDCs continue to outperform in an inflationary and rising interest rate environment as investors prepare for higher rates that are accretive to BDC earnings to support higher dividends. Many equity REITs and most mortgage REITs have had negative stock price performance over the last 2 years. For the same amount of income with less risk, it's better to invest 50% less capital in BDCs at 8.6% compared to equity REITs at 2.8% to 3.8%. So now, in addition to these things, there's also a tax advantage that comes along with some BDCs that you get over REITs. One of the things that I don't see very many people talk about when it comes to dividend investing are the taxes that we all have to pay on these dividends. Yes, it's free money, but if you've lived in the US for a year, then you already know Uncle Sam, Larry, and Henry always got their grubby little hands in our damn pockets. So when it comes to taxation on dividends, there are two different categories. You have qualified dividends and you have non-qualified dividends. What's the difference between the two and why does this matter? A qualified dividend is a dividend issued for particular shares of stock that are typically domestic companies and some foreign companies. These shares must be held for a specific period of time, and in addition to these conditions, these shares must not have been hedged, meaning they can't have been involved with calls or puts or short sales. So for those of you that actively day trade or swing trade, the dividends received from these particular methods of trading will not be considered qualified dividends. So what's the advantage of a qualified dividend then? Well, the difference is in their taxation percentages. A qualified dividend is taxed at capital gains tax, which are obviously lower than the rates on unqualified or ordinary dividends. Sometimes these rates are worlds apart. We're talking 15 to 20% depending on the stock. This is one of the reasons I'm looking to go heavier into Maine, because its dividends are considered qualified dividends because of what they invest into. Now, some of you may be wondering why investors are attracted to monthly paying dividend stocks over quarterly or semi-annually paying companies, and the advantages are rather clear. There are basically two advantages that affect us the most. One, obviously, monthly dividend stocks creates more of a regular income, meaning this is income you can count on and plan for because it's consistent. Number two, and this is the big one, monthly dividend stocks will compound faster than annually or semi-annually paying dividends, meaning those reinvestments from DRIP will grow a lot faster. Speaking of dividends, let's look into Main Street Capital's dividend. We see a forward yield of 7.22%. That's 22 cents per share currently. It has an A+ rating under dividend safety, meaning their dividend is very stable. With a certain degree of certainty, you can count on these dividends being paid out. Analysts see this stock as having a possible 17% upside growth potential, which is actually less than what they project for Gladstone Commercial. But me personally, I have experienced more volatility and Good than I have with Main. Good does have a slightly higher dividend yield. So if you really couldn't decide between these two, then just build positions in both of these and have your cake and eat it too. So just for fun, I wanted to know what having 100 shares of Main would cost me and how much that would be in monthly dividends. I run these sort of hypotheticals with a lot of my dividend stocks, and I find that doing this motivates me with goals to achieve. So 100 shares of Main at the time of this video would cost me $3,690 and would pay me out $22 every month. Well, that's something that's very attainable, right? Puts things in perspective as you build out your strategy to become financially free. I recommend that you all do this with your different dividend stocks to help you stay motivated with achievable goals that will set you up later with that financial freedom that we are all on the hunt for. But those are my thoughts. Tell me yours in the comments below. Let me know if you own either of these and what your favorite dividend stock is currently. And as always, thank you for watching. Remember to invest diligently, but what? Invest responsibly. Later.